to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Sip. How you doing, man?
Happy July. This is episode 88. Today is
Wow.
July 7th. We went ahead and went with a little bit of the America background in spirit of 4th of July. And so maybe that's where we should start today is we were talking last week about going into this holiday. Now the holiday is over. We're starting to get a little bit more excitement. People are getting back. The markets are moving.
Mm-hmm. That's correct. I mean, let's take a look. Let's go right to the technicals. So if you remember last week, we were looking at the S&P 500. And one of the things that I had some concern about is this move that we had. Let me go ahead and make sure I've got my drawing tools synced up here. Yep. And let me zoom in a little bit so we can really take a look at what we're talking about here. So I had looked at this move back, and I was kind of bummed, Sip. I was kind of bummed that this thing wouldn't come down here to its level of um, support that I was looking at. And I really wanted it to fall somewhere in this zone right here. I call that the center zone. And instead, it basically fell a little bit short. If I draw a line maybe over here and then connect it over here, you can see how short it fell. I wanted it to get somewhere below 4,307. And instead it only got down to about 4,328. And I was worried about that because when you don't have enough distribution, when you've got an uptrend or a downtrend going, if you don't have enough of the opposite movement, then the follow-on movements get kind of weak. I mean, you could see that over here. When we go back in time a little bit, you can see that this retracement or contraction movement just wasn't what it should have been. And then for like 3 or 4 movements that followed, they all kind of lacked until we got back into the groove. This one was weak, and now this one looks like it's going to be weak. When folks came back from the holiday, the Fed was talking on Wednesday about how their rate hikes don't see that the economy is very resilient and their rate hikes really aren't doing more. They're going to need more rate hikes. Although what also came out clear was that there's a disagreement in the Fed between how fast those rate hikes should be applied and when. Like, should we wait 2 or 3 sessions and then go a little bit slow, one at a time, or should we be throwing more on like we did last year? So all of that confusion caused some sell-off. And then Thursday, we had a lot of economic news. Most notably, the ADP employment report came out, and it was, surprisingly strong, which this is a case where good news is not necessarily good news because that, strong employment usually means that the Fed is going to want to tighten more. They're going to have more of an excuse to tighten. But then, of course, today, and now that we're jumping into news, you take a look at today, and we had this employment situation report right here that came out this morning, and it actually disagreed with the ADP employment report from yesterday. These two just did not agree. The employment situation report, if I zoom in on it really quick.
Well, that's kind of what I was thinking because the number yesterday was really off the charts compared to today, is what a lot of the headlines were saying.
Yeah, the ADP employment report told us that, more jobs were created in June than we expected, like to the tune of hundreds of thousands of more. But when this official report came out, they actually came back and said, no, that's not what we see. we see that, last month we had 306,000 jobs created. This month we only had 209, and that was not only less than the previous month, that was also less than what was expected. Unemployment is still low, which isn't a bad thing, but what you can also see in this report, which is very interesting, is these hourly earnings. So each kind of went down in this official report. We take this monthly hourly earnings, 0.4%, and we multiply that by 12 months. And that kind of goes out to something like 4.8%. That's well above the Fed's 2% goal for growth. In fact, that's even above what we've been making annually so far, which is 4.4%. So people are still getting paycheck increases, which is going to lead to more costs in the system, which is going to lead to higher prices at the markets, whether it be for services or whether it be for goods. So that's something that has a little bit of people on edge. But as far as the number of jobs, I mean, let me just go back really quick and show you that ADP employment
I
number.
mean, it was like 500,000. That's what
I mean,
in my mind, I was like, I've never seen that number that high.
it was off the charts. It was 500,000. And so somebody, they're going to go back. You see how they do these revisions when they go back and look at the numbers again the next month. So I think somebody's going to do some heavy revising. I think it's going to be somewhere right in the middle.
Still,
It's going to,
that's a huge variance.
I know. It doesn't make sense. And a lot of times, ADP is a private company. Depends on where they're getting their data. But usually by the time we get this report next month, somebody's going to cave and those numbers are going to get revised. But that caused a little bit of shock in the market. What it also caused, if we go back to the charts, is it caused, today, unless we start to see a lot of buying, today we're getting a confirmation that the high that we saw on July 3rd, this past Monday, was going to be a high. And there'll be a trend reversal coming down again. So that kind of goes back to my original point. I know I'm going between the charts and what happened, but that kind of goes to my original point, which even though we got continued uptrend movement and we brought ourselves up to this level of resistance, it wasn't as high as we would have wanted in an ideal uptrend. We want more aggressive expansion, and we actually want to see some more contraction. Having us come all the way down to these levels of support every time we contract is helpful in keeping the trend going for the long term.
And so it seems as if this week's summary is employment is strong. That's not good for, or the economy is resilient. That's not good for the Fed continuing to pause rates. And so everyone's starting to bake that in. Another headline that I saw that I thought was very interesting was a 1-day move in the VIX of 17%. And so I'm curious as to what that 1-day move might do to some of the positions that you have an eye on or things of that nature, because doesn't that bode well for selling insurance premium?
Yeah. So you could see right here, the VIX had been hovering for a good month down here at its lows around 13 and a half, something approximately like that. And now it's back up around 14 and 3/4, 15, no problem, right? And so a couple of things you want to think about here. We have been setting up a lot of initial positions. These initial positions allow us to then sell premium in the future. So you set up an initial covering position, and depending on the type of premium you're going to sell, whether it be call or puts, that initial covering position could be as simple as buying some stock or shorting some stock, or you could also incorporate some leverage and buy some back month deep in the money calls or puts. So we have those initial covering positions in place that allow us to sell premium in the future. And that price of that premium actually is tied to the amount of implied volatility measured by the VIX. So if the VIX goes up and we sell premium in the next week or two, we're going to get top dollar for that premium. So we're actually, as premium sellers, liking that. A lot of people look at the VIX and they say, oh, when the VIX goes up, things are getting uncertain. Well, premium sellers love uncertainty. And because it makes our premium, it puts us on the correct side of the equation. When we sell the premium, we get top dollar for the options that we're selling to those people who are hedging their long-term investments.
And so would that be affected in today's price, or is that more affected in 2 days ago when the fluctuation took place?
No, as you can see, the VIX is, staying up there. I mean, we're having a little bit of a drop of the VIX, but not all the way down to where it was. So as of right now, the option prices are that much higher than they were at the beginning of this week.
All right. Well, I think that's a decent summary of where we are in the market. We don't necessarily trade the market directionally, or that's not something that AJ teaches. More of the strategy is geared towards having a consistent income stream using the selling of premiums. And so I'm trying to get my screen up here. We just want to invite everybody to AJ's free workshop where he breaks this all down. So if you haven't had a chance to go check it out, AJ's got a wonderful workshop, runs every day. I believe it's pretty up to date as of maybe last week or the week before that in terms of the examples, but a little bit more in depth on the strategies. In this show, we're going to be going over some live examples, AJ's pick of the week, and things that are more relevant. But in the webinar, you're going to get your strategies. We've gone ahead and thrown the link to that in the chat. So head on over there, check that out. As usual, we are broadcasting live. So if you're watching and you have a name that you want AJ to go over, a position, feel free to throw it into the chat. We're going to take a quick break. We'll be back and we'll discuss our trending topic, and then AJ's pick of the week, and then our speed round. So stay tuned. We'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
I imagine that's how you look when we finish the show. You're just out and about in the streets, having a lovely time, cruising around. I know that you're out in the beach house. So moving on to our trending topic, AJ. Last week we talked about a potential bust in the tech sector, whether it was a bubble or maybe some uncertainty. We were just kind of questioning whether the charts and maybe some of the data shows that. This week's trending topic is riding the bull, right? So as you shown on the charts previously, we've been having this uptrend and it's a little bit weaker than you would like. And so I guess the question is, do we ride it out? Is there some sort of secret sauce in the actual stocks within the S&P 500? Is it a seasonal thing just for the summer? I guess the question is, should we ride out the bull? That's kind of what we're trying to get an answer to.
Yeah, I was taking a look here. Let me see if I can zoom in here. I clipped this image of stocks that were surging the month of June. And so take a look at these numbers here. So we've got Carnival Cruise Line. Now we were looking at this to sell premium, both of these, Norwegian Cruise Line and Carnival Cruise Line. And all of our initial covering positions started to surge, and we wound up not selling premium on these, and rather at different tops, we were taking our profit off of the initial covering position. They basically broke out and became trending positions rather than premium selling positions, which is fine. All of our strategies automatically adjust like that. So, but these are different than the usual tech boom. Now, of course, Tesla also has been shooting up, and that's a question mark. Why is Tesla shooting up? The airlines, rentals, another cruise line, Ford Motor Company, Southwest. So a lot of the airlines are shooting up. Lincoln Natural and Generac Holdings. Generac Holdings is generators, right? Those guys are the guys that are making sure that in storms we stay electrified. And then Lincoln National is a bank. So I guess the question is this sector rotation we're having? I mean, what kind of stocks are you looking at these days, Sip?
I'm just looking for ways to sell premium, to be honest.
Oh, so I kind of have got you to jump on that because I know at some points you were like going for some of the high flying tech stocks and some of the cryptos and things. Yeah, it's interesting to see that sector rotation. You were going to say.
Well, I was just gonna say the only other one that I'm really interested in is the electric vehicle charging, just because I'm seeing a
Ah,
lot of it, and I could see that being a big shift in how we as consumers just operate. Like it's a worldly thing, and I was always curious as if there's names in that. But I think you're talking more about general sectors, right? I know we
yeah.
talked about tech last week, which is kind of dying off. So, would this make the case that some of the pre-COVID industries, or even just like seasonal, right? Is Carnival up because everyone's taking vacations now?
It seems like cruises are where it's at. I mean, look at this. The top 3 stocks, for June that are surging. I mean, 67.9% gain in market cap. That's nothing to sneeze at here. And the only tech stock that's really making a rise is Tesla, and I wonder if that has to do with some of their aggressive pricing and sales techniques in order to maintain um, you know, the market lead in the EV world, especially as some of the bigger companies like GM and Ford come online with their EV goals. But I'm wondering if we need to start focusing on some of these more consumer discretionary type plays that I'm seeing over here, as the stocks that we watch to be bellwethers rather than some of the tech plays like the Metas and the Googles and the Netflixes.
I mean, you would have more of a say than I on the matter. And is there any other consumer discretionaries that you think would, that are on any of your watch lists?
Well, I think also, yeah, we're looking at, I think that there's a lot of folks moving their money to companies like Walmart and Dollar General. I think that a lot of consumers who would usually be buying things at like a Macy's or a Cole or even a Target are starting to buy the same things that they're down uh downing not in quality but just the experience that they have. They're not necessarily going into the stores or shopping online at the stores that have the higher um, perceived experience in the shopping world. They're just going ahead and settling for the dollar stores and the Walmarts out there in the world. But at the same time, you've got a high-end consumer who is still shopping your cruises. They're shopping, diamonds. Fashion is at an all-time high right now for those people who can afford it. So I think that, these are some of the folks we want to be taking a look at, like the name brands, like the Tommy Hilfingers and out there, and all of those different type of tickers. I think those are the ones that maybe we need to start taking a look at. Maybe I have to put together my own little basket of funds in my watch list because it's kind of diverging from what the indexers are showing us.
And if what becomes true from the charts that we were looking at earlier, it seems like we're going to continue to putter along at least trending a bit higher through the end of the year, because we'll have the shopping season coming around.
Hmm.
Hopefully interest rates get stabilized a little bit. But I definitely think you're onto something. There's a few of these under the radar sectors are names that probably have some life now.
What do you think is what do you think is behind Tesla's pop this June?
I think it's the charging stations, because now
Yeah,
all the other EVs said that they're willing to use them. So I mean,
that's strategic, isn't it?
that becomes like a whole new business model. Not only do you make the car, but you own the gas station.
So what SIP's talking about, guys, is that Tesla has been making behind the scenes deals with GM, Ford, and possibly Toyota to open up its chargers. Tesla was the forefront of making sure that Tesla chargers were everywhere. Now you'll be able to charge your Ford and your GM and your possibly Toyota electric cars at the Tesla chargers in the not too distant future. And Tesla's going to be making a lot of money off of that. In fact, I think that Ford and GM are actually spending a lot of their money that they got through the U.S. What was it called? Inflation Reduction Act, and giving it over to Tesla. So Tesla positioned itself quite well to just be that source. I mean, we might find out soon enough that Tesla makes more money renting its chargers and having provided that infrastructure than they do even selling the cars.
Yeah, and maybe I have a bit of a different perspective because I'm in Los Angeles, in
Right,
California, where
right.
it's very heavy. But like even everyday trips the to the gym, right? To the Equinox gym that I go to, there's a whole section of just where all the electric cars park. They got all their chargers. People hang out. It's almost like it's gonna become the norm, and I can imagine that happening across the rest of the country in time. And it's just kind of weird to see it become so normal. But I guess that's kind of the power. And maybe, in a subtle way, Tesla is coming around to actually fulfilling a lot of the things that they're valuing them over.
Yeah, it'll be interesting. It'll be interesting to see how it all plays out. But I think that coming back to our topic, I think that we need to be looking at different areas besides tech for our overall sentiment on the market as well as where we go next.
All right. Well, so that's our trending topic of the day. We're going to continue to keep an eye out for some of these new industries. But with that, we're going to jump into some examples, right? The reason we have the show is so that we can in real time show you how to take these strategies that AJ and the team have been developing for 20 years now, right? The Trading Trainer, I believe we're in the 20th
August.
anniversary
Yes.
at the end of the month. 20 years of putting this practice into the real life scenarios. And on the show, we go over examples. And every week, AJ's got his pick of the week, something that he's got his eye on, something that he's getting ready to pull the trigger on. And this week's pick of the week is dun, 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 Sunrun, ticker symbol RUN. And AJ, I believe this is a new one for the show.
It's new, and it's not one that I would usually be attracted to because the company sometimes doesn't, they're right on the verge of being able to break even, right? So I usually I'm attracted to companies that are established, that are making money, giving money to the investors. Sunrun's a little bit on the cutting edge, right? They're a battery company. In fact, they're pursuing a unique chemistry in batteries, zinc, which is a lot more prevalent than a lithium. And they're going to be really, I think they're positioned well. With that said, if I take a look at their stock, I'm going to go a little bit farther back in time. This is a year-long chart. I'm going to go all the way back to 2 years. You can see that this guy's got a nice sideways movement. And I like the choppiness because that lets me leg in and out of different positions over the months in order to basically squeeze out as much revenue using the power of options, right? And so right now, even though it looks like it's in like a medium term downtrend, overall, it's just seems to be at the bottom of its current price action. And so I'm looking for an opportunity. Again, I'm going to wait for my signal that a bottom has been found. So I'm not, I'm going to be looking this upcoming week. But I'm looking for an opportunity to somehow get an initial covering position in place on Sunrun. And that would either be buying a stock, so I could buy shares of Sunrun. It's trading around the $16 mark. And so I want to buy those shares in lots of 100 in anticipation of selling premium at a future date. So I can totally see myself buying some stocks. If I want to start the premium selling ahead of time, instead of just buying the stock outright, another option for me would be to start selling cash secured puts. So if I was to sell a cash secured put, all that means is that I jump in here, I look at like July 21st, and I pick a price that I'm willing to pay for shares of Sunrun. So say, for instance, I'm willing to pay $15 per share for Sunrun, and I've got that $15 in cash lying in my brokerage account. And say I want to do 100 shares. So I have what, $1,500 sitting there. I'll go ahead and sell this cash secured put at $15 and I'll immediately get 20 cents per share. So I'll get $20, right? I'll get $20. And if between now and July 21, somebody wants to go ahead and sell me this stock that's currently trading, well, it's currently trading at $17.22. But if they want to sell it to me for $15, they can. If I get to July 21 and nobody wants to sell it to me for $15, that's fine. Either way, I get to keep that $20 or that $19.50. It's changing as we speak since we're in a live market. I get to keep this money. And I can do that over and over and over until somebody's willing to pay or willing to sell me the stock for $15. So that's another way if I want to start collecting those premiums in advance. Otherwise, I could buy the stock outright if I, like instant gratification. Either way, that stock will act as a covering position for me to go ahead and sell premium in the future. One other way I can set up the initial covering position if I want to incorporate some leverage is to go pretty far out in time. Like I'm saying go as far out as June of next year. So about a year from now, June 2024, they have options expiring June 21st on June 2024. And you can buy a deep in the money call option, maybe this $5 strike price. And it looks like the open interest is quite low, which would usually be an alarm bell. But it also looks like the bid ask spread is very small, which tells me that the market makers are okay with providing liquidity on these back month deep in the money options. And so instead of buying the stock, if I wanted to spend a little bit less, I could instead buy one of these far out in time, deep in the money call options, and that would also act as an initial covering position for me to sell premium in the future. So either one of those things is what I'm looking to do, only if I see a bottom being found sooner than later.
All right. So this is how I kind of take in what you just analyzed. So we like the potential for this to go up in the future. And so in order to take advantage of that, one, we can buy the stock now at $16, or we could sell a put at maybe $15 where we collect a little bit of premium, but also if the price comes down to that level, we get a better price. Right now it's at 16, we could get it at 15, we collect a little bit of premium, we get a better price. Then we hold that for some time, maybe 6 weeks, I think is kind of like the time frame that we've discussed on the show. We hold that, but at the same time, we sell some calls to collect some premium so that not only are we going to make money as the stock goes up, but we're going to collect a little bit of premium if the stock doesn't go up too much, right? And so that's kind of the concept behind it being a consistent play where month over month or every 6 weeks or so, we can kind of put that into play. And being at $16, the options, you don't need too big of a portfolio to really put this trade on, right?
Yeah, I mean, everything you said is exactly right. And you said about 6 weeks. If we look at history, this looks like about 4 weeks here. This looks like about 3 weeks here. This looks like about 3 weeks. I think it'll be more like 3 to 4 weeks. So what we do is after we have our initial covering position in place, we let this thing appreciate and we look for signs that it's petered out. And it looks like I said, probably 3 or 4 weeks from now, it'll peter out. When it peters out is when we sell the premium. So we sell the call premium. We can even throw on a protective put at that point, which could also be a source of income in the future. And then we allow that stock to do what it's going to do, and we'll get into the cycles of just selling that call premium every single time. But as of right now, you're absolutely right. We're either looking to buy, we're waiting for the signal. And so when we get the signal, we'll either buy the stock or we'll buy that deep in the money, far out in time call option. Or a third option would be to sell that naked put, that cash secured put at whatever strike price, whether it be, we looked at 15, you could also do 15.50, whatever you're feeling comfortable paying for this stock. You could go ahead and sell that, even today. But generally, I like to get signals that we're getting close to a bottom, and I haven't seen those signals yet. So I might wait until the beginning of next week, even if I'm going to apply that third strategy for getting my initial covering position.
Yeah. And what I like about this example is I think this is a great example for somebody that's new to options, even to paper trade, because it's easier to understand and the price point's not bad. So that, like you said, if you wanted to buy the 100 shares, what is that, $1,600, right? So a portfolio less than $2,000 could get you into the position. Or on the option side, how much would that be? Like you said 19 cents, so like $190, $200 to take the option side. All right, so that's a great example. Put it on the watch list, keep an eye on it, see if it comes to fruition.
And I spoke out of turn, Sip. I got confused. This Sunrun company, they're selling residential solar. They're not the battery company. I think that's one of the user picks for this week that we got by email. So I apologize. This is a residential solar play, and I think that's big.
All right, solar, electricity, all that jazz is going to be the future. So loving these names that bring out some probability for us to take advantage of it. All right, that's AJ's pick of the week, ticker symbol RUN. Now we'll move into our speed round. So throughout the week, people have been throwing out some names that they want AJ to take a look at. So we're going to go over them. Some of them, there might be positions, some of them not. AJ does a real good job of really giving his honest opinion on things. So to start things off, we're going to head up north to Toronto, Canada. And this is James, interested in a classic name, BlackBerry, ticker symbol BB, which is an interesting topic because I don't know if you know this, but there's a movie out about their story right now on demand called BlackBerry.
Yeah, remember I think it was a blog or something, the Crackberry blog or forum or discussion area.
And then the one thing I remember is that
The keyboards.
Obama always had a BlackBerry when he first came out. So I was like, oh, if the bosses are wearing or having Blackberries, anyways, we know what happened to BlackBerry. iPhone came out, and over time, their technology diminished. But it looks like they're still an active company. It looks like they're still doing some business.
They're still out there. Now, we definitely have to I gotta look at, like, for instance, let's look at a 10-year chart. So since 2012, still trading at the same range. Let's go back all time because, as
Hmm.
you know, BlackBerry did get their price all the way up to about $148, $150, but they're trading down here at $5. So that tells you a little bit about BlackBerry. But at the same time, let's also take a look right here. And you can see, they're reporting their earnings, and they are basically breaking even. So they're doing something. Um, I don't know if they'll ever get back into the game again like they were, or if, investors and consumers alike will ever really embrace. I think they have to pivot. And I haven't looked at their portfolio lately or what they're doing, but I think they have to pivot out of the mobile phone market. With that said, um, this looks interesting. Let me come back here. Maybe we'll take a look at a 1-year chart.
I mean, it is a very cheap stock, right?
I mean, it's cheap. It looks like we're finding something around 550. Let's take a look at the options chain. Just make sure that there's stuff to be traded here. So we'll look at the near-term option. And if I take a look at the near-term option, they're trading every 50 cents. That's good. That gives us the granularity that we need. There is some activity there. They're trading every penny. That's nice to see. I just want to make sure that it's healthy. So far, it's healthy. Let's take a look at the December options. These are ones that we would probably use in any sort of like protective directional play. Trading every dollar, great bid-ask spread, open interest. That looks healthy too. And finally, let's look at some back month options just in case we want to do some stock substitutes, looking healthy as well. So there's a very healthy options market. So it just comes down to analyzing the pattern and figuring out what you want to do. So here are some options. I mean, we could get right into it and we could be selling that cash secured premium that I was talking about. So basically, let's say, for instance, we're okay paying $4.50 for this stock that's currently trading at 482. So if we're okay at paying $4.50, we come over here to a July 21 option. So that's going to expire in about 14 days. Here's the $4.50. We can easily make $4.50 for every contract because they're sold in lots of 100. We'll make $4.50 for every contract that we want to sell. And then when somebody's ready, they'll sell us the stock for that lower price at 450. So we could do this month in and month out and make this premium $4.50. So it looks like it's a 1%, currently going at about a 1% return on investment. That would be every month. And so you could basically do this until you buy the stock. And at the end of the year, especially if you're compounding, you'd have like a 15% ROI, which is way better than any sort of mutual fund is going to get you or any sort of passive investing. And this is just one transaction a month. And then once you have that stock, you can then flip the plates and you could start selling calls against them and maybe go with the $6. And if we look at that, that's pulling in another $2. $2.50. So you could keep that income stream running whether or not you buy or sell the stock, because that's what when you sell a put option, basically what you're doing is you're saying, I will buy this stock at this price, and in return for doing that, you're going to give me a little premium. And then when you sell a call option, you're basically saying, I will sell my stock at this price to you. And in return for me doing that, you'll give me a little, whether we do that transaction or not. So the idea is to start making cash flow off of this premium. I think that this might be a good stock to do that with. Let's sell some puts, acquire the stock at a low price, and then let's sell calls against that stock. Let's try to sell the stock at a much higher price, and the whole time we'll be collecting premiums. This might be a good beginning stock. And again, it's also inexpensive, but because the options on this are so plentiful, I could see creating a nice income stream, especially if you're not a very active investor. I would say, there's this thing called passive investing. That's putting your money into CDs, putting your money into mutual funds. And then there's active investing, which is getting a little bit more active. But I have coined this term, and some of you might have read that in some of my emails recently, called passive trading, right? And passive trading to me is somewhere in between the passive investing and active trading. We're talking about doing one transaction a month, right? And so I think BlackBerry, and who was it who gave us this? This is James
This
up in
is
Toronto.
That's correct.
I think James, you might be onto something as a great stock to be first selling puts against it to acquire the stock, and then selling calls against the stock that you acquired, and just going back and forth, all with the thought in mind to be making income off of it.
Yeah, I was trying to do the math real quick. You could pull all this off with a portfolio with less than $1,000, right?
Hmm. Oh,
Okay.
definitely. Definitely. If you did a couple contracts and you're talking about buying at 450 and then selling again at 6, I mean, right there, as well as the beautiful part is as well as collecting the premiums, what you're also having happen in between is, when you actually do have the stock get acquired or removed, if you buy something at 450, if you buy 2 contracts, that's $900, and every like 2 or 3 months you get it cashed out at $1,200, there's this bonus bulk sum of $300 that you make, as well as collecting the intermonth premiums. So, I mean, yeah, this is a really nice one, and I love all the activity and the options. It would make this one really easy. I think he's on to something.
I would say if that's an interesting trade that you're in, go watch the movie, then go look at the fundamentals, and then follow along with AJ's recommendation. But it is out on vid. It just came out like 2 weeks ago, so
Is it streaming?
yeah, but you got to like rent it on the streaming
Ah,
platforms. But it looks good. It's definitely on my list. So thank you, James, for that. We're going
thanks,
to
man.
keep the ball rolling with the speed round. It looks like we got a nice little tech energy theme here. The heading back south. This is Cheryl in Scottsdale, Arizona, interested in Lucid, ticker symbol
Ah.
LCID. I believe this is one of the Tesla competitors. Yeah.
Yeah, yeah. I know where I live up in Washington, D.C., we have a big retail area called Tyson's Corner, and they have actually a retail storefront for the Lucid. So I've gotten a chance to go check out the car, sit in the cockpit. It's a pretty nice car, but Tesla really has established itself as the one to knock off the pedestal, and now with GM and Ford going into the field, I don't know about the longevity, but so long as Lucid makes a big product, they're following in the footsteps of Tesla, where they're starting with the high end car first. So I think their car sells for like over 100 grand, just like the Model S did. The only thing I'm worried about is, again, they're late to the game. Tesla did that, and they were the first in the game, and they started like 10 years ago. And now Tesla, as you know from their pricing, is trying to price their cars so that more people can buy them. So Not sure that Lucid is going to get any farther than the early adopters. With that said, let's see if we can turn it into a premium trade. I'll raise my red flags. The company doesn't seem to be able to make any money yet. They keep losing money every quarter. Let me zoom in over here a little bit closer, because it looks like we looked at Lucid once before when it was trading up here in the $18 to $20 range. Guys, it's down here at the $7 and 42 cent range right now. So, I'm not sure investors believe in Lucid's model. So I almost would recommend, Cheryl, and I know Lucid's manufactured where in Chandler, Arizona. That's halfway between Tucson and Phoenix. Maybe the reason why Cheryl's interested in it is because there's a lot of activity in Arizona on the Lucid. But with that said, I almost feel like I want to bet against Lucid. And so I see that Lucid is forming a short-term top over here. Again, it doesn't look like it has given us the final signal that it's done going up, but I wouldn't be surprised if it gets maybe a little closer to $8 and then starts sinking down. When I get confirmation that it's sinking down, I could see myself, Cheryl, shorting Lucid. Shorting means, borrowing some stock from my broker and then selling it in anticipation of buying it back at a lower price, and giving the stock back to the broker and making that difference. So I would be poised to wait for a signal that says that the top has been found, and then shorting some Lucid. And then I wouldn't be in any rush to then buy to close that short position. In fact, the option I would short would probably be quite far out. Let's see what type of options they have. If I go far out in time over here, they do have a June 2024 option, and it is trading just about every dollar. So the other thing I could do here, instead of shorting the stock, is I could buy a back month deep in the money put option, and that would act just like shorting it, right? This guy would go up in value if the stock price went down. So either one of those two transactions is probably what I would be thinking about in the not too distant future when I get a signal. But then, like I said, if I start to find another bottom around $5, $5.50, instead of closing down that transaction, I can get into the cycle of selling put premium and creating an income trade out of that. But I would want to play it by ear. I would want to make sure that I get a reversal around this $5. And if I don't, if it continues to sink further, then that's where I would just let my initial covering position run as low as it'll go, get out of it, and move on to something else. But I'm not too excited about Lucid.
All right. That's the breakdown for Lucid. Thank you, Cheryl. Moving back to the East Coast, this is the name that AJ brought up at the top of the show, and that is EOS Energy, ticker symbol EOSE. And this is Charlie in New Jersey. This is that what did you call it? Energy play of some sort?
Yes, I think these folks are thinking about getting into DC backup. So these are the guys with the special battery chemistry. These are the guys who are going to build batteries in order to back up solar. So renewables that aren't on all the time, they could be in addition. When they are on, in addition to powering homes, they could be charging up batteries. And these are the batteries. I think this company wants to be in the forefront of creating these special batteries made out of zinc in order to back up the new grid. And they are based in Edison, New Jersey. So they've got some history there with that's where Thomas Edison did a lot of the DC electricity experiments he did over 100 years ago. Company does not make money. but it looks like investors are getting excited about the company. So one thing, I don't know much about this company besides the little few minutes of research I've done, but you may want to. This is Charlie. Charlie, you may, and since you're in Edison, New Jersey, you may know something about this company. You may want to do some research to see if they're on the edge of a breakthrough or something, right? Something that could cause what we're seeing with investors. I'm looking at now about a year, and so the stock has been trading between about $1.50 and $3, and for some reason it's spiked up to $5. So you'd want to figure out what that's all about. Um, and they must have come up on the market back in 2021. I'm going to keep going back here to see how long they've been around. Yeah, so they haven't been around. I went back all time here, and so they've been around since 2020, June of 2020. So I think they probably jumped in on the market with a splash of news back in the day. Let's see if I can frame this really well with my charting software. So they jumped into the market with a splash of news about some technology. And then when it came down to it, the tech ready for prime time, something must be happening that's exciting the investors again. So figure out what that news headline is. Let's take a look and see if there's any sort of excitement in the excitement in the option chain. I was expecting to see a really small amount of activity, and instead I'm seeing a lot more activity than I expected. Let's look at this November option. They're trading every 50 cents. So there's some granularity. I see some activity as we're sitting here. I see open interest. I see small bid-ask spreads. That's telling me that this has a really active option market. I'm seeing the same thing on the near-term option. If I go out to say February of 2024, there's some activity happening on the options. I did not expect to see that. So that's good. That's a really good sign for us option traders. So find out what the news headlines are. Why are investors all of a sudden buying since the end of May? Let's use that cash secured put strategy in order to get some of this stock at a lower price. So it's currently at $4.45. Maybe we sell a cash secured put at $4 or at $3.50 and see if we can acquire this stock at a little bit cheaper price than what's going for. And if we can't, that's fine. We'll still be making our premium every time we try to do that transaction. So let's start there. Let's start by researching the news headlines and figuring out what's been happening in the most recent news headlines. Then if that makes sense, let's see if we can secure some of this stock at a lower price than it's currently trading. And if not, at least be given those premiums in the meantime.
Yeah, I feel like today's topic is very cheaply priced stocks where there's opportunities, right? Like I don't think a single name has been over $20.
No, these have, in fact, maybe not even over $10, right? I like that. I like that about all of these. That means that even people with very small portfolios, you can start playing around with this. And I don't see that any of these symbols that we've looked at today, SIP, are going to be requiring you to be sitting in front of the computer being an active investor. I think you could totally pull these off with a couple of transactions a month and otherwise just letting that money run, right?
That's right. All right. So earlier in the show, we talked about AJ's webinar. In addition to AJ's webinar, he's got a wonderful one-on-one training program. So if you've liked what you've heard, if you've got the portfolio to put into action, but you want a little bit more hand-holding, you want a little bit more attention, then this is exactly for you. I've gone ahead and thrown the link into the chat. head on over there, have a conversation, 15 minutes. It won't be a waste of your time. You won't be
No.
pressed. You won't be hard sold on anything. The goal with everything that AJ does and everything that Trading Trainer does is to put you in the best position to succeed in however you want to invest, right? Whether you want to be a little bit more active, whether you want to be a little bit more passive, there's a strategy for you. And this is a great program to help you develop that, to help you get the answers that you need. So head on over there. The link is in the chat, the one-on-one training program. All right, AJ, we're getting close to time here. I feel like today's episode was really, really great for any of the newbies or any beginners wanting to get into trading options, have a smaller portfolio. I've had some great names to review today. All right, heading into next week, right? We're midsummer. Are we still in the summer doldrums? Should we not be getting too excited about things?
Well, I mean, it depends on the perspective. So yes, summer doldrums right after the July 4 holiday, they're in full effect. We don't expect any sort of excitement to really jump into the markets until after Labor Day. So we've got about 2 months of this. So put yourself on the right side of the equation. That means that if you want to keep it rolling, let's sell some premium. And we could start selling premium in the effort to acquire symbols. We can sell premium if we've already got symbols. In fact, we could sell premium against shorted symbols. So get those initial covering positions in place. And now when it gets boring, this is premium sellers like heaven. So we're going to be looking for the next 2 months at where we can just start collecting this ongoing instant dividend, instant income from these sleepy positions.
Yeah. And it's in a way, it's like you let the time work in your favor, right? Mm-hmm. And so that's kind of the concept behind a lot of the things that are shown on the show. So
that's exactly right.
Get those positions in line. Enjoy the rest of the weekend. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. We'll be back next week with some more topics. If you have some names that you want AJ to run through, feel free to drop it in the chat. Feel free to send us a DM. AJ, thank you for your time.
Absolutely.
Everyone, thank you for tuning in. America, let's go. Enjoy the weekend, everybody. Thank you for tuning in.
Thanks, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.